Hey traders, this is Thomas and welcome back to another episode of price action trading, where we're using price action rules to help us identify high probability setups. Now the first rule that we're going to use in order for us to safely identify high probability setups is going to be a trendline rule, which says after break of a trendline, traders expect to create new extreme, and after new extreme is formed, we expect correction or possibly reversal. But before we dive into that, we first need to do our pre-market session, because the US stock market opened around this area right here, a little bit earlier right here, which means you have to do your pre-market analysis. And that means I have to mark my low of the day key levels, which is this support, and I have to mark my high of the day key level, which is this resistance, because there's a big chance that these key levels may come into play in the future, and they will potentially make you and give you information to stay on the right side of the market. Now, the market kept pushing lower, and when I first was looking at the chart today, I drew my trend line tight like this. Then I saw we keep creating new low and we keep creating new low. For that reason, I adjusted my trend line like this, but you can already see that there's a room between the bars that are really not fitting nicely. And when you see this, when you keep looking for wider pattern, but it's not really fitting nicely, there's a likelihood that the channel is not really a channel, but instead spike and a channel. And you can see that this is a 3 bearish bars, spike move down, and then a channel formation. So if you're struggling to find the proper channel that will fit nicely, a lot of times the first leg is big spike, the second leg tend to be a channel. So we have a spike and a channel identified, we have a downtrend working lower, and at this point on, a high probability setup is a two-legged pullback at the key entry point, second entry short, because the trend is down, and we want to stick with the trend, we want to sell. We have a new low form, first entry short pullback, second entry short. Now I almost took this trade. I was preparing to take this trade with a limit order further back down, but fortunately it was so close, 1 minute before the open, I canceled the order. And notice it is not really at the exponential moving average, so you have to be careful here. This is the first break of the downtrend. You expect new low, but since it is before the open, you want to be a little bit careful because there tends to be spike in volatility around the open. But notice, if the second entry short is not at the EMA close enough, that means that you can potentially get a larger visual two-legged pullback double trap. And notice what happened. Market open, pushed above EMA, horrible doji bar, another doji bar that then we ticked higher and instantly reversed down. And at this point on, this looks like a first leg up, pullback, second leg up, which is a visual two-legged pullback, and also one high here, double top here, triple top here. I can just pull it slightly lower and you guys can see there's a triple top at these highs. So for that reason, this is my first trade for the day. A little bit doji-ish like, but it could have easily closed on its low with the bearish body. And downtrend still needs to get new extreme. Push below EMA, and there is a confirmation of the bearish momentum. And this is now a high probability setup lower high. Notice this lower high is very close to exponential moving average. Great bearish single bar. You still need to get new low according to trendline rule. It is still below EMA and it's confirming the larger visual two-legged pullback. So if you're unsure about the structure here, it is close to open. You can wait for confirmation lower high that is confirming what happened here, and this is a high probability setup. And notice what happened next. Strong push to new extreme, and the trendline rule was filled, which means now you expect correction or possible reversal. So which means I have to keep drawing my trend lines for these big patterns, but for these short-term corrections at the same time as well. So we have uptrend working higher, we have a break, and the prices are strong and pushing higher. Now I wasn't really expecting a larger uptrend here because this was pretty a good move down. So I was looking for continuation of this bearish downtrend, but as you guys can see, it never really got strong enough momentum. We reversed higher and we kept pushing higher, and now it was difficult to find a pattern. Because once we kept pushing higher, you can either find this tighter channel, or there is a possibility to look for a channel like this. And both channels look really great. Doesn't really matter which one you use, because they will still both get you to the same place. When you are struggling to find a proper channel, just focus on the EMA, how prices are reacting to the EMA, and look for a high probability setup at the EMA. Now we have a new high, and the structure has changed. We're no longer bearish, we're strongly bullish because we are above EMA, and notice this important key level, prices pull back, and the key level is right now holding again as support. So this is why it is coming into play right now. This is a two-legged pullback, but it's not quite touching the EMA. If you had better signal bar closer to EMA, you could have taken this, But on my chart, I really would have liked to see pullback to the EMA, because this is really a lot of times what will give you a double trap when the second entry is really not close to exponential moving average. But prices kept pushing higher, and now it is confirmed bullish uptrend. You can even find this channel. EMA and the trend line are running together congruently, which is giving you confidence in the uptrend. This was a news area, and you see a new high, first entry long, pullback, second entry long. Once the uptrend is working higher, your goal is to wait for high probability setup, which is a two-legged pullback at the key entry point. Are we at the key entry point? We are. We are at the exponential moving average. This is the first break of the channel, so we expect new extreme to be formed. And even if you're playing the Y of the channel, you are still inside of the channel. So this is a two-legged pullback at the key entry point, but notice the signal bar. Stim at the top, dojish, looking very neutral, couple bars stacked. I will mark it just in case you have a much better signal bar on your chart, because it's really nice how the EMA keeps holding. But with the way it formed on my chart, I really recommend waiting. It's too stacked, a lot of stims. So this is definitely more aggressive. But if you have better signal bar and less congestion, the way the bars form, definitely a decent entry. But it is a second entry long at the key entry point, and you expect new high to be formed. But very borderline. I would not have taken this trade on my chart right here. But you guys can see you're focusing on the two-legged pullbacks. You're not interested in chasing the market all the way up to these highs. You need to wait for market to correct and come to you. There's always a push phase and there's a correction phase. There's always a push phase and there is a correction phase. And you need to make sure you're buying low once there is the correction phase, the pullback. You never want to keep buying high during the push phase to the upside. So new high was formed, and notice the high of the day key level that you marked is coming into play again. And from price action perspective, this may play a role throughout the day. So prices are right now pushing lower, and you are not looking for longs at this point on. You're at the top of the trading range. And if you're playing the wider pattern, you have the overshoot for pattern, which means you expect break of a trend line or possibly straight up reversal. And prices are strongly reversing down. Now at first, you're playing this downtrend working lower, because remember, you need to keep always trying to identify the proper pattern on a chart, because these candles are never without a pattern. So we have the high of the day, we have the low of the day. Uptrend played out with the break and new high. And right now, I adapt and I'm looking short entry. We have a downtrend working lower, break, new low. And we have a first entry short, pullback, second entry short. So we have second entry short, two-legged pullback. But notice it is not quite close to EMA. There's still room. Shortened uptrend is still in play. And the downtrend had break and a new low. I feel it is a little bit aggressive. It is a nice bearish bar. But still, there are a lot of factors that are going against the price action rules for me to take this trade. So I'm not going to mark it. I was even potentially watching a channel like this, because you're coming from the range highs. You may reach all the way down here. But this channel just has 2 touches, so it has not been confirmed just yet. And once prices are pushing above EMA, you don't really want to go short. You have a new low, first entry short, second entry short. But the uptrend is in play. Horrible signal bar. This is way too big and you need to get new high. And by the time you get new high, EMA is in the middle of these bars. You're bouncing off the support, starting to look too stacked. I would need to see lower high below EMA, confirmation of the bearish momentum. And lower high never formed below EMA. You are still above the exponential moving average, which means I'm not really shorting just yet, but I don't really want to go long just yet as well. It's a little bit unclear, but the support is coming into play and it's taking precedence. Now, when you're watching for uptrend, it's quite difficult to find the proper pattern, because once you draw this, you have a break and a strong move to a new extreme, strong move to a new extreme. And remember, trend lines have to be proportionate. This tiny little trend cannot have such a massive push to a new extreme. That means that this channel is not correct, it's not proportionate. This channel would be extremely wide. Okay, I cannot focus on this channel because this is too wide of a channel for trading range. So that means I'm going to let this move play out. And this is where the true bullish leg started. So I'm going to use these first 2 swings to help me identify the channel. We have a break of this channel. We have a 2-legged pullback. We have a second entry long, but notice far away from exponential moving average. And this is what can happen if you're not patient and you're not waiting for prices to pull back to EMA. You can get stopped out just to see it go where you thought it was going to go, and the new high was reached according trend line. After that, you expect correction or possibly reversal. But I don't think you're going to go long above this trading range. You never know where you're going to pull back. You're at the very high of the move, at the very high of the trading range. Very risky. So you see, there has not been too many opportunities for you to capitalize on. If you don't get 2 good entries at the start, you basically don't get a decent setup during the day. And this is a very important lesson about the mental aspect of trading, because my first trade for the day was this setup right here. And then I sat here for over 2 hours and I took this failed second entry short as my second and the last trade for the day. And once you're sitting here for over 2 hours without a setup, your mind will force you into taking an entry. And your goal as a trader is to consistently monitor yourself and your susceptibility to these behaviors, to these mental errors, because every single time you feel like you're risking an entry, you need to nip it in the butt quickly and take a little quick break. You just have to be patient, because I remember I was about to take this trade right here, or thinking about it, and even though it worked here, notice I'm at the very high of the move, at the very high of the trading range. This is not really the safest entry I want to take, but I knew that I was feeling the need to take the trade, because it is hard to sit here for 2 hours and watching these bars go without you and you're not partaking in these moves. But it's sometimes what you have to do. Sometimes you will get 2 easy trades back to back, 2-3 easy trades, and you'll be done for the day. And the other times you have to sit here for 2 hours just to get comfortable with the setup you want. So that's part of being a trader. That's part of trading price action, and it takes experience to identify when you're most susceptible to these mental errors. But you have to be patient and you cannot force entries. So now the uptrend has a break and new high and it's pushing below EMA. We are above the trading range, so most breakouts of trading ranges will fail. Prices are pulling back lower. We have a new high, first entry long, second entry long failure. This would be a reversal pattern. But can I go short here? Notice we're not touching the EMA. I can't go short here, definitely no. But let's say hypothetically we were touching the EMA here. Can I go short at that point? Well, not just yet. And why? Because notice there is still strong bullish imbalance. Notice from this very bottom how strong of a move up this was. Basically from the very open, we were in a bullish structure. So I need to see stronger push below EMA for me to start thinking about selling. This is still way too early, because even though the bigger pattern is trading range, yes, but this uptrend was strong on its own. I didn't really see a proven downtrend yet. So I wouldn't really like to take a failed second entry long, even had it close, right close to exponential moving average, given how strong the bullish structure was. So you cannot just zoom in and forget the big picture. You always want to zoom out periodically and remind yourself what the bigger picture looks like. Same reason, there's the first entry short, second entry short, not fully touching the EMA, a little bit too early, going short directly into the high of the day. Also, I had my break and new low, because if I drew it slightly wider, I still have a small break and new low. This is just one of those areas where you have to be patient. You don't want to force entries. If anything, I was looking to go long. We have a failed second entry short, but still below EMA, just no good clean entry. It's better off to be patient. And now you see we have a lot of up and down moves. We have first leg down, pull back, second leg down. So we have a 2-legged pullback down. We have a first leg up, pull back, second leg up. So at this point on, EMA is getting flat. It's no longer pointing up. It's flattening. We have a lot of up and down moves indicating a trend line structure. So that means I'm going to be drawing my trend line super tight. I'm not going to be finding a channels like this. This is way too wide and way too early for that. I'm not going to be drawing channels like this. This is not the place for these channels. This is a trend range. I'm drawing my trend line super tight. I have a break, new high formed, push below EMA, break, new low form. Actually, when we have new high, first entry long, second entry long failure, this is the point where I was starting to look for failed second entry long, because it feels like the downtrend has already been proven, but far away from EMA, didn't really set up right. You have to be patient. I really want to see it close to exponential moving average. But once you form clear break and clear new extreme, and it looks like there are lows for this trading range, we have a first entry short, pullback, second entry short, break and new low indicating bearish momentum is over, flat EMA, and a lot of up and down indicating trading range structure. So we're coming from the lows, probably somewhere to these highs. And once we have a failed second entry short above EMA, big bullish bar, this was my second trade for the day, and this is a second entry short failure, because they got short after downtrend was made. We're coming off of these lows. And also we are inside this channel. The short and uptrend is still in play, and we're above EMA. Great failed second entry short. I managed to get 6.5 points as a runner. No new high was tested, and market strongly reversed down. And now finally, you can see that the momentum is starting to change, because you have a double top, larger visual double top, strong push below EMA, but notice you're back all the way in the middle of trading range, and this was a substantial move down. And you can see that this is one swift leg down. This is choppy. This is one leg correction, second leg, and it's not pushing lower so strongly, but this is such a one strong leg down where it's giving you information that the market is probably changing, and at this point on you're starting to think bearish. You already moved too far down, and this is indicating to you that the structure at this point on is changing. I'm following the trend line rule as well, and I have overshoot, which means according to price action, overshoots lead to a break of the channel or possibly reversal. So I have to draw this uptrend as well. And we have new low, first entry short, pullback, second entry short, failure above EMA. Is this good felt second entry short to take? It is not. Why is that the case? Because the major pattern right now, of course, is a trading range. Oops. The major pattern is a trading range. Look at how sideways we've been going the entire day. At this point, it is obvious there is no trend. We're just working up and up and down consistently. So we're coming off the highs of the trading range, probably all the way down here. And also the smaller, bigger pattern is this downtrend. This uptrend is smaller than this downtrend working lower. So I'm more leaning towards creating a new low rather than thinking that this uptrend needs to get new high. For that reason, I'm not taking long here. I don't want to go short just yet. I'm above EMA. And only after we push below EMA, take higher and strongly reverse down. Notice we have a lower high, below EMA, below this resistance right now. It acts as a breakout pullback. Great strong bearish signal bar. You expect new low to be formed. High probability setup, and then you have new high, first entry long pullback, second entry long failure. Second entry long goes against the main trend, which is down. We're coming off trading range high, so we expect lows. So great two high probability setups in one, great signal bars. Look at the stim at the top. It looked very bullish, and at the last second, everybody started selling, indicating reversal bar. This is what you want to see. You place your stop loss one tick above signal bar here or here, had you ended lower high, and you managed to get the scalp. Now, new high was eventually created, but I think that these trades are safe given how nicely EMA keeps holding prices and the bars are showing rejection. You guys can see quick scalp, new high, and prices are pushing back below EMA, indicating bearish momentum again. New high formed, first entry long, pullback, second entry long, failure. Right at the exponential moving average, great signal bar, bearish bar, and prices are pushing over. So you're just focusing on the high probability setups. You're not looking for these entries in the middle of nowhere. Don't try to pick top or bottom. Definitely don't try to pick bottom. Wait for prices to give you a high probability setup, or wait for prices to trap traders on the wrong side of the market. And at the time, I didn't have this wider downtrend just yet because this is a trading range and I don't like drawing wider patterns. So I'm sticking to the short-term ones. We have a new low, first entry short pullback, second entry short. Notice you keep drawing these corrections, break and a new high, indicating that it is safe to sell. But second entry short form above EMA without any key entry point to grasp on. So the signal bar is so great, you probably could have risked it. But I like to have some form of a key entry point to hold on to justify taking this trade. But prices kept pushing lower, and at this point it's starting to be obvious that there's probably a bigger pattern, but no good downtrend is fitting just yet. We have this wider downtrend, but I just want to emphasize that these wider patterns are not reliable so often. So I was just sticking to the short-term patterns. We have new low formed, first entry short, pullback, second entry short. We have a second entry short, but notice you're not full at the EMA. Horrible signal bar, stim at the bottom. You have to be patient, but it is a form of a two-legged pullback. So once you see this, you start paying attention. Okay, I have a two-legged pullback. I'm close to key entry point. What if I get lower high? Price is stalled, take higher, confirm the EMA, big bearish rejection bar down. Full bearish, lower high, confirmation, second entry short of a two-legged pullback, great signal bar, and market kept pushing lower. At this point on, I thought this channel is valid, and notice you have new low, micro double bottom, and you have a first entry short, pullback, second entry short, great big bearish bar, and this second entry short would have failed. Now this is nice two-legged pullback, break, attempt to create new high at the EMA, break of this downtrend. At this point on, structure is looking really bearish. So this is definitely a decent trade to take a chance on, and just a regular losing trade that every strategy has. You cannot avoid losing trades. So if you took this entry right here, definitely a great entry to take a chance. It almost reached the scalp. With a good limit order, it would have, but either way, this would have been a failure had you entered at the close. This was a great entry to take a chance on, but what it ended up being is you have this wider pattern, and there ended up being a small little overshoot, which leads to break of a channel and possible reversal. So you really have to trust this channel. But on my chart, I don't really get this channel fit nicely. I don't really get the confirmation here. The only thing you have to grasp on the lows, but wide channel like this in trading range, you really want to see a good confirmation at the top. So it was not easy to trust this channel, but this was the main reason why this trade failed, because the overshoot leads to break of a channel or possible reversal, and you see the strong bullish reversal, break, move to a new high, and now you have a first break of the major downtrend. So you'd expect for prices to push below EMA and give you felt second entry long or lower high, but it didn't happen. Prices pushed back above EMA and continue chopping higher, which means new uptrend was created. And now it's a bit confusing because you expect new low to be made, but at the same time, this support is holding. We have new high, first entry long, pullback, second entry long. Is right now bouncing off 2 key entry points. But I'll be honest with you, had I been watching this live, I took a little break here. I probably would be still focusing on prices creating new low for the downtrend. I would not be focusing on long, but looking back, even have the support here coming into play. So this is really new high, first entry long, second entry long. This is really a decent entry. I can easily mark this entry, but it's a little bit, of course, a little bit hindsight, and I like sticking more to shorts. But once you see prices not pulling back down and creating new low, and the fact that they are pushing back above EMA here again, and this is a trading range structure, the low of the day that you identify early is coming into play consistently as well. Makes this decent to like a pullback, break, new high form. Pretty much you can see no safe entry can be identified before the market is closing. You can see how price action is working. Channels have a break, you expect new extremes. After new extreme is formed, you expect correction or possible reversal. And drawing the channels is a skill like anything else. With time and experience, you will be able to identify and draw your channels easily. So keep observing how to draw these channels because it gets much easier with time. So I hope the video was helpful, educational, and I'm going to see you guys in the next one. Take care, everybody.